Welcome, guys. Thank you for joining. Nice and early. Apologies that I'm running a little bit late. Just a few errands running over for the day, so we'll get started on the charts in a moment. Just update everybody in the channel, everybody in the Telegram channel, see how we're going. Good stuff. So let's get started. So as you can see, we are starting here on the crypto market. Quite simply, it's had a crazy few days. And we're trading at some really key levels, and that's what this session is going to be all about. We're going to be looking into what levels markets are trading at, maybe having a look into what levels are nearby so that we can start planning some trades and starting to map out how the week may look ahead. We'll also be having a look into some of the major key events for the week, so we can also be aware of any upcoming news events that may affect the market as well. Okay, so as I say, welcome everybody who is online, and use the chat feature here to either say hello, introduce yourself, ask any questions around trading. This is a great opportunity to do so, get direct access into ourselves, and also request any charts that you'd like to have us analyze, and we will try and get them included as well. Okay, so good stuff. Let's see what we can look into for XRP. It's something that's taken my attention just because fundamentally XRP is in a holding pattern. If you look at it just price wise aside, putting the price to one side, we are essentially fundamentally in a holding pattern, just waiting for an outcome of the SEC case. Now that's quite interesting for me, because I know that if there is a fundamental kind of block on the price, then it's probably going to be range bound. It's going to probably be somewhere between a high and a low, because that's what those fundamentals are outlining. And then simply the technicals are going to be in and around that price. So kind of in terms of the current situation with the SEC outlook, SEC case, then we are going to be essentially, I think the general outlook from crypto enthusiasts and people who are reporting on this is quite a positive perspective from the XRP's perspective. SEC's case has some holes in it, but equally so, we are well aware that it is a first real test of the legislation, authorization, and kind of legitimacy of the cryptocurrency market. So that does have a bigger role to play, and the outcome of that case will have wide ripple effects across the entire market, not just XRP. So I think everybody involved in cryptocurrency in some way or another will be watching that the outcome of that case. So with that being the case, we are trading right at the lows. We're retesting the lows here from July 21 and June 21, and realistically haven't traded below this price since early first quarter 2021 and last quarter 2020. So this is a key level for the market, quite clearly. You can see that quite obviously. And the important thing to remember, say if we pop that price band on there as a level of support since we were last trading here, each time that we have traded from this level, first and foremost, this is what I'm looking at from a technical perspective. Let's have a look here. Long, lots and lots of liquidity, lots and lots of bullish action. And we went well over, targeting pretty much $2, $1.93 on that first bull run from this region. Okay, so that it tells me fundamentally, if I didn't know anything else about this security of this market, then I would be pretty aware that there's going to be a lot of liquidity based at that level. So if we come back into that level, there's going to be a lot of buying happen from that region. And it's exactly what happened. Once, twice in summer 2021, we took this level and we rebounded, not all the way back up, but we were certainly targeting the 1.4 region. And it was a significant bounce, that's fair to say. So we were looking at something in the region of 159% bounce, which is a significant bounce. Even if you're just simply buying and holding this without any sort of leverage on there, you'd make substantial returns on your investment. Now, we came back into the same similar region early this year, and again, didn't get all the way back into the region, but pretty much near enough. And a very, very strong bounce. Not only this, so really, really quick and strong bounce. That within pretty much a few weeks, we were trading near on a dollar, nearly pushing towards that dollar. It was 0.90 cents itself. So again, that's showing me that there's significant buying at this level. Okay, so even though these, when you look at them themselves, if we just simply get rid of the price action, you can see that buying is getting less and less. The momentum is getting less and less, but it certainly doesn't mean that it's over yet, because we're still seeing from this region 62% rise from the last bounce that came into here. The one before that, we were looking at over 100% again, and of course, as we said before, well, this one was a huge bounce on that first explosion from this price level. Okay, so gives me an indication that probably going to be in a pretty good region for buys at this level, and realistically only need to be too concerned if we get a closure below that price level. Sorry, a couple of messages coming in. That was all. So, yeah, so that's a key element, and that's pretty much similar with the entire crypto market. Okay, so it's not just simply XRP. I could pretty much analyze any one of these cryptocurrencies, and if I just simply look at the total cryptocurrency market cap itself, then this is where we're at. Okay, similar price actions happen pretty much all over. As you can see, there's been bounces from this region the entire time. So where will this one lead us to? It's yet to be seen, yet to be decided from the market. But these are the kind of markets that I'm looking at. XRP, just simply because I like the fundamentals around it, based upon, unless anything significant changes with the SEC case, then we're probably fundamentally going to be in a similar position. So it's only technicals that I'm really considering. And then when I look at the technicals, I'm pretty happy with where we're at from support level. The rest of the market is in a very similar position. So it tells me it's not anything specific to the XRP price level. So when we look at this, I'm looking at this market as a whole, really, and pretty impressed with what I'm seeing. At least going to be, I'd expect the most likely positioning from this position for XRP is to at least see some sort of bounce. You know, if we were to get back above 60 cents towards 70 cents, that would be a pretty significant profit for anybody who's involved at this price level. So that's my thoughts, and that's where I'm going to be positioning myself for the week ahead. But we'll wait and see. Can already see once we've come back into here from today's price action, if you look on the hourly, we've already started to see a little bit of a bounce from this region already. So we'll just see how that plays out, see how that runs for the rest of the week so far, and be watching it quite closely. Right, so if anybody does want us to analyze any particular cryptocurrencies themselves, and we'll have a look into those as and when they get requested. But for the rest of the market, I think it's just going to be a pretty similar story because, as I say, that's how the entire market itself is looking. Let's have a look if there's anything in particular about these total twos and total threes. So this is for anybody that isn't aware, total is the crypto market total cap with all cryptocurrencies, including Bitcoin. Total two is all of the cryptocurrencies market cap without Bitcoin included. And you can see pretty much price action hitting similar levels. And if we take both Bitcoin and Ethereum out, then we are actually breaking through a couple of those levels where we're looking to break down a little bit further. So if we have a look on the daily, you can see that that level of support probably was back up here for this level. Okay. So let's have a look how we're looking. So if this is Bitcoin and Ethereum taken out, so this is essentially the altcoin market. Okay. And you can see altcoins are looking to sell off a little bit stronger than Bitcoin and Ethereum. So that is important to remember and important to play into that, because you could see a larger drop, larger volatility ultimately in the altcoin market than you could the larger cap coins such as Bitcoin, Ethereum particularly. But I would also include in there XRP because it's looking a very similar thing. So when you look at some of the altcoins, you can see how some of these are selling off significantly more than other ones that we're looking at. So you look at Uni, Link, Compound. Compound's not doing too badly, but it's generally, Compound's at a good support level. MakerDAO, pretty much its last line of defense before we could probably fall back into the 775 level. Algorand just looking at tried a decent bounce rate lately. Or some of these newer coins that were listed on Coinbase early last year, are similar positions. Okay, so so yeah, we have a couple of comments coming in from everybody. So thank you for you guys getting involved. So Berzad, hello. So the question is, thanks for your explanation. I speak English very well. I don't think this chart has any hope of a big climb right now, at least in the next few weeks. Okay. Well, as I say, I think we're at a key level of support. It's a decision point in the market, and it's a point of where the market will either fall from this point, and if it does start to break this level of support, then certainly is going to see some significant fall off from that level into much lower levels. So that's clear to see, but I think that I wouldn't rule out a bounce at this level and somewhat of a turnaround at this point as well. So I don't get caught out on that. If you are thinking it's going to sell off further than where we are right now, then I'd probably stay on the sidelines, and I would be looking into just waiting to see if that support level breaks, and then at that stage you can then execute some shorts and try and get into some positions to capitalize on that trade idea that you may have. But at this moment in time, I wouldn't be selling at levels of support. That's a key element. We had Fox Global. Good morning, everyone. How about MES? MES. Let's have a look. To make it easier, if you are looking at a particular chart, then clearly, if it is a crypto that you're looking at there, then by all means, give us the full ticker name. Otherwise, just let us know what market is you want us to to analyze. So we're going to move away from that for a moment. We're going to have a look into the commodity market. We're looking into oil. This is on my red list here. These are markets that I like to have a look at because they give me an indication of where the entire market is at. All right, so I'll look into the oil market, I'll look into the gold market, and I'll also look into the stock market and the crypto market. So if I'm only going to look at the markets for 10 minutes, these are the charts that I'd look at because they give me a good indication of where everything else is going to be. Give me a second. I've just got to plug in my laptop and we'll be with you in a moment. Running low on battery. Back with you now, so at least the laptop's not going to die on us, so we're not going to lose us. Let's have a look. Where are we? So the oil, that's where we're going to be starting. So looking at the daily here, I'm probably going to only really be focused here on like this price action region there, because before that fundamentals were somewhat different to what they are now. So the entire market around oil, natural resources, natural gas, oil, all of the derivatives from that are very much driven at the moment around the expectations and the news events that are happening over in Ukraine. So with that being the case, I'm only really going to be focusing on what is the price action doing within that time period. So let's have a look. Get rid of that. What I'm going to just simply do, first of all, is map out these monthly highs and monthly lows for each of the months of that period. So the high was here as well. So, and as we're currently at the moment, the current May low is there. What I'm going to do, I'm going to pop that in yellow, just to be aware, because that's in progress still. We're not entirely sure that that's going to be confirmed by the end of the month. So that's important for us just to be aware of, so that we can actually get an idea of what's happening at the moment. All right. So the narrative of what we need to look at here from what's happened is that the war in Ukraine essentially became official. There was very much murmurings and pressure before that, but it was somewhere around about the 28th of February and going into the weekend of the 1st of March. And that's what saw a huge drive up in price all the way up to $127, $130. I think it topped out at near enough. Before a big crash back down, and it's kind of printed that high and low for the fundamentals, and that's what I like to look at. Tying up fundamentals and technicals together will give you an indication of like the boundaries of price of where they may well reach, and then essentially the fundamentals would need to change, the news events would need to change for those price levels to start getting start getting broken. Okay, so unless strange things happen, that's a great kind of framework to start basing some of your thoughts and analysis around. Now we have then had throughout April a high in the market around this 110 to 107 level, and that's where we're trading at now. So that gives me a thought process here. We've broken through that. So traded throughout May as this situation in Ukraine has developed to where we are now. Okay, I've thought the price level for oil, and that's not the only fundamentals, by the way, but it is the main story that's driving this price. As we drive up, so traders throughout May, kind of the first week or so, have brought significant amounts more oil and priced oil at a much higher level than what it was in April. And we've broken through the highs of the previous month, and now we're looking to retest those highs. All right, so another way to look at this is look at the closure, the daily closures, right here. So daily closure for the highest close in the month of April was 107.16. Okay, now we are retesting that as we currently speak. And what we're doing is, you can see the price action that we're currently printing. It's pretty bullish. We're retested it once and bounced off. Retested it again, bounced off. Third time's bounced off that level, and again we're bouncing off that level as we currently speak in this 4-hour candle. So another candle closure above here may well give you a good indication of where the market's pricing itself for the next week ahead. At least, may well be for the month ahead. It's just important to kind of analyze these elements and try and put this whole picture together. But it's giving you a hint of where it's thought it should be headed. May traders are kind of bidding the price up significantly. We've got this nice structure, higher highs, higher lows, and it could well be printing one of those higher lows at the moment before we look to push on higher, and may well be looking to retest the high of April. So that would be in my thoughts as a potential target. All right, so somewhere up there would well be a potential target that I'd look at for oil as a good, at least first target level that you could actually take some profits at, because I think that's, if you're buying here, that's going to be a natural level that you target at, that you'd start taking some profits. So that's my thoughts for the week ahead, at least. But it's certainly giving you a good indication for oil of where we could well be. And I probably wouldn't be looking at too many shorts unless we start retesting this level and going back below these levels here. So, excuse me. So that's a good place to start. Now, let's have a look at gold. Where are we at in gold? From our last weekly breakdown. Our breakdown last, was it Thursday or Friday? I can't remember exactly off the top of my head. We've already got quite a few of these levels marked out, which is really useful. And this is going back a few months into 2021. So where we're trading at right now is one of those key levels. And let's have a look into how that price action is moving. And we'll have a look into that right now. So we have probably going to be useful off the 4-hour. Lots of liquidity came into the market here. Okay, this candle right there, you can see that's absolutely snapped back off that level. Bosh. All within one 4-hour candle, we've broken from 1907 to 1874. So dropped significant amounts of liquidity sold at that point. 366 pips. So a significant amount. And that's important to pay attention to, because ultimately we've had that price action now a couple of times once we've traded into this region. And essentially what that price action has done, as you can see, the market structure that we're printing is at the moment fairly bearish. So this is market structure that we're looking at here, nothing else. Get rid of that. If you get rid of all of the noise, this is essentially the direction of travel that the market has been at the moment. So I personally wouldn't be looking at that type of price action. I think the probabilities are on my side of buying at that level. I wouldn't be looking at that myself. I'd say that there's quite enough, there's at least equal arguments that could be, that the market could continue selling off than it could be turning around at this point. And that's the important thing. It's all about probabilities when it comes to trading. Are we looking at the probabilities are on your side? Could you weigh up the probabilities of, is it going to go higher? Is it going to go lower? And are those probabilities at least 80% in your favor? If they are, then you may well have a good chance of making some profit. If it's 50-50, then there's probably going to be a better trade somewhere else. Spend a bit more time analyzing and find that better trade. That's just, logical sense that you need to be implementing if you want to be successful in this game. So, that being said, in terms of where would I then want to buy if the buys, if this situation turned around? And I'd probably, if I start to break this level here, the 1910, 1920, start getting some 4-hour closures above this level, then I'd be significantly interested in taking some buys, because 2 reasons. We've then printed a nice head and shoulders pattern. If you imagine the market from here kind of moves up to there, something like that, well, then that's going to probably look a lot more bullish. Let's see if we can do something. Does this work? I don't know. These are some... Yeah, so if the market started to do something like that, then I'd be interested in that sort of trade. Okay, let's get off this. How do you stop this? Do you need to click off it again? Anybody who knows? I feel like I'm stuck with this now forever. Bear with me. How'd you get rid of these? That's annoying, isn't it? Even if you get out of drawing mode, it still stays. Give me a moment. How on earth do you get out of this? So weird. Maybe that's it. Brilliant. There we go. So you learn something new every day on TradingView. Try new things. That'll teach you to try new things live. But we worked it out in the end. So yes, if we have a look at this, and if the price action was to do something like this, then I'm interested in taking the trade around about there. Okay. So again, get a retest somewhere around about there, look, then I would be interested in taking the trade somewhere around about there. All right, because then that's created a head and shoulders pattern for me, and it's changed the structure, more importantly. So then that's changed the structure of what we were looking at. So that's the always weigh up two things. You've got to weigh up both sides of the market. What would happen if the market changes direction? I've got to be prepared. I've got to be in position, and already have probably done some of my analysis so that I'm not actually making emotional decisions in that moment in time. So a key little lesson for people there as well. So there we go. For anybody who doesn't know, I double clicked there. I used Mac, so double clicked two fingers and it worked. That's how it went away. For if you ever get stuck in that situation as well. But also, Dimple Pamwa has said press escape, which probably works a much easier way as well. So try that as well. So where are we at? Yeah, so overall, for gold, probably not looking at buys unless we get back above here, but equally so, we are at levels of support. So again, sells not really in conversation at the moment, but these are the key levels that I'm looking at. We've got a nice region here as well. That's the other region. That's what I was meaning to say to you, is that I'm not too much interested in like this move, because that's quite a bit of congestion there. Not very nice, friendly, not very clean price action. And the risk to reward, I could easily make that trade go wrong, and the reward isn't huge there. However, probably about double the reward is available for taking that trade, because there's nice clean price action. There's not much towards the left hand side, and we could easily fulfill that range that was previously in there from last time. So it just looks a nicer trade for me there opposed to anything else. So let's move on. We've done oil, gold, done the crypto market, and also a couple of questions coming from Dimple Palmer. So you requested Bitcoin. As I say, we did at the start a lot of the cryptocurrency market. So we're going to move on to the Forex market now, and then we can come back to the crypto market if you'd like later, or alternatively, feel free to watch this stream on repeat once it ends. You can watch it again just simply by clicking the link, and you're able to see the analysis that we went into for the crypto market at that stage. So let's have a look. What have we got here? Let's create a new list. So I'm going to look at the USD JPY market. We can have a look at the Euro USD market. Look at pound, how that's gone on. Pound's pretty interesting at the moment. And we'll have a look at Aussie as well. So on these, really strong price action from the dollar against the yen. And that's happened pretty much now for the last couple of months. Not really shown any signs of weakness. So these types of trades, it's like the trend, always trade with the trend. Ultimately, the trend is your friend. There's many different sayings and cheesy sayings around trading for trends. Trade the trend until it bends, that type of thing, all that type of good stuff. So you've got really strong price action here on the 4 hourly, and it doesn't take a genius just to work out. As long as the market's trading in that direction, either hold on to your longs if you're already in position, or if it comes towards the end, the bottom of this trade, of this trend line, then we're in pretty good position to continue trading and just kind of trade with that trend. One thing I will be aware of, though, is this price action just there. Because we haven't broken the high with that next one, and then we're now printing a 4 hour engulfing candle, bearish engulfing candle. by no means is a reason to sell, but certainly with that, looks like we've tried to break up the highs there at 131. Where did the high reach at? 1.3136, and we traded right back into that a second time. So we came off quite a bit. We came off the off that level quite a bit. Bulls got back interested, as you can see around this region here, and we've come right back into that level and traded into it again and reversed. So that is something just to pay attention to. And look, you don't want to be the first time you buy this market right at the end of such a long trend and it then kind of starts to fall off. So I would just watch that for a moment. Probably wouldn't jump in straight away, and I would be looking at into what sort of, if we can break above that, then you're probably going to continue going. Let's have a look into the weekly levels. Where are we into on the weeklies? Goes back pretty much we're at highs all the way back up until July 2002. Can we get a new feed that's going to give us a bit of a better history? Does FXCM give us a bit more history? Yeah, it does. Goes back to the 90s. So, as you can see, probably the highs the next kind of big test that the SDJPY is going to have is around about that 134, 135 level. It's got some room to run just yet. If you look at that on a 4-hour, you can give you an indication of how far it may well still have to run. So there's absolutely no harm in just having a little bit of patience, you see. So if we pop that on there, look, absolutely no harm in having a little bit of patience, waiting to see what happens. If the market gets back above that level, then great. You've still got a lot of room to run to get all the way up to there. You've still got over 300 pips to play with. Just about being patient, watching the trade, just double checking all of your options of where you're at the moment. So what can we do to plot out? Let's have a look on the 1 hour here. What I'm going to do, just going to plot out the daily levels. Daily highs and lows. Okay, so this gives us a good indication of some of the key levels for the pullback that we just had in terms of where could we trade into. Especially if we're making kind of a double top there, we could easily see some of these levels get retested. Already seen one get tested almost to precision. The highs from the 2nd of May. And that was somewhat of a little range that was being tested. So that's been retested quite successfully as we currently speak. It's only 5 minutes left on the hourly, so plenty of time still to go on that. What levels have been traded through? Probably that level's already been traded through a few times, not based as a level of support. So that's okay. So I would go with those as my key levels in terms of what to watch for this market. Okay, come back into some of these levels, then certainly going to be of interest to look at taking some intraday trades, some shorter term trades that you could actually target, opposed to swinging the market, as it were. That was the pullback that we had. I don't respect too many of those. Does any of these line up with the Fibonacci from the low that it made? Certainly that one at the 61. That'll take some interest for me. So somewhere around about there. Let's make that a key level that I'd watch just to see whether or not we can tie in any other level of confluences with that as well. So can you get price action? Are you able to get any indicators that you maybe use that give you some levels of confluence that there's a good trade idea coming in around that level as well? I personally, and certainly some of the followers that we have, use one of our key ones called the reversal algorithm that we've created ourselves, and we if we can line that up with some of these support levels, and that makes a really good trading strategy. For more information on that, you're more than happy to have a look at our Telegram, and there's loads of information on there as well. But that's the type of thing that I'd watch. So if we come back into this region here and we can start adding some more trade, it could just be price action, similar, price actions to what we've seen here, rejections, candles, candle wicks, and things like that. If you can add those things alongside your analysis, it just adds confluences, adds more probability that your trade idea is correct, and go from there, really. So, what I'm going to do here is have a look at any upcoming news. So, for those that aren't aware, who don't follow us already, this is our news channel. We run Trading News 101. So, on here, you can keep up to date with all of the fairly recent news that's affecting markets, the major news really that's affecting markets. But what we use daily is the economic calendar. And it just gives you an indication of what's going to be the most important market moving news that's coming up. So, and it's nicely sorted out in terms of like yellow will give you an indication that's maybe so like red is the most important of what could potentially move the market. These grey areas probably not going to move the market on their own, but useful to know to put together. Yellow, kind of a medium impact on the market. Okay, so really nice and easy to see. And what have we got coming up for the So this will be fairly important as well. And it's quite nice as well. You can actually click on this and it will give you an indication of where that indicator has been recently and a little explanation of exactly what it is. Okay, so here the where moved? The economic sentiment indicator for the Eurozone. So this is for the German economy, really a large part of the Euro economy. So important to actually pay attention to that. It's forecast for 40.4, and I'd imagine sometime early tomorrow will be market moving, independent of whether or not that moves away from the expectations or not. CPI that is very sensitive at the moment as well. That's coming out for Wednesday. Again, a speech by the president of the ECB coming out Wednesday morning as well. Crude stocks, oil will be moving. This happens weekly on Wednesdays. It's Wednesday afternoon. And a pound on Thursday. So GDP numbers come out Thursday morning for the pound, and you'll see some volatility around that region as well. The Mexican Bank of England probably won't move much of the market. Hong Kong. That's essentially the major market news. So probably from this, what I can be aware of is the fact that you're going to have Thursday morning is going to be the pound moving significantly. You're then going to have oil move significantly, and also with CPI data coming around the US, probably Wednesday afternoon is going to be quite volatile for oil and the US market. Wednesday morning and Thursday and Tuesday morning can be quite volatile for the euro, and we don't have anything. The New Zealand dollar throughout the Asian session tonight, so it gives you a good indication of what you can expect. Just tying those in with the charts as well is important. What can we see for the euro? Nice on the hourly. And selling off quite strongly. Get these levels marked out on the euro. What we look at, so breaking that low, trading into these lows here on the weekly chart. And again, Just map out the highs, the lows of each month. It's easier when you work it out this way as well. There we go. So these are the levels that I've been looking at for the Euro USD. Making a level of support here is quite significant because when we do look back on the weekly, it takes a while to go back to, but we are trading at levels back in 2015, 2017 around this region as well. So certainly when we look at this on the daily, you can see that market sell-off that has been heavy in motion all the way back from February. So about 1, 2, 3 months now of selling, a sustained selling pressure. And it looks like the market has found a little bit of level of support at this point. So important just to kind of pay attention to that. And we've now had 1, 2, 3, 4, 5, 6, 7, 8 days of market consolidation, all around the same price level, which is significant to pay attention to. So if you are buying at this level, then you've got a clear target ahead of going up into the 1.08 level for Euro USD. And also watch with the upcoming volatility that's going to come out from the Euro over the early part of this week. Be aware of that and potentially even use that. Is that going to be the catalyst that gets this consolidation moving one way or the other? Is it going to continue its sell-off? Or is it all of this support that's been building in anticipation of those economic indicators coming out, which will give it the push it needs in order to form a little bit of a recovery, similar to what it did back in March, early March. So, this similar type of move, revisiting a previous level of support and resistance, revisiting a key level, certainly is possible, having seen the price action that we've seen. We're creating this level of support. If you even zoom in a little bit further, if we take this on the hourly, for example, you can just simply see all of this price action where the market's created that low and it's come back into that. And look how it's reacted the moment it's come back into that that hourly low. Came into it with quite a significant amount of force, but it's literally hit that wall of buying and rebounded quite significantly. Look again on the 4-hour and you can see it even more clearly that just simply lots and lots of buying is happening, and your big 4-hour candle has just come in there as well. So these are the types of things to pay attention to. What levels are actually getting the significant levels of support and the violent levels of support, because they're the ones to pay attention to. That's where all the money is hiding in the market. So is that going to act as a good level, a good impetus to push for a little bit of a high from where we've been in May, which has been consolidation pretty much throughout. So good to watch and a potential trade idea that you can put together there. Look on pound USD. So we'll just map out some of these regions that we've got marked out here. Created that low. In the previous week, we created another low. The high of this week was just there. Low of the week again came in pretty much where we are there. So when we look at the pound USD, we're retesting now a low from the previous week. So it's a good retest. See what's happening here. When you look on the 1 hour, what can we see? Just tap back into that region. Look on the 30-minute if we've seen anything interesting. I would certainly be looking at this with some interest on the hourly at least. Yeah, certainly some interest in there. So there's been significant selling in the pound, but we have had that double bottom look just there. See how precise it is? Does it give you an indication? Certainly engulfing candle came in there. Previous low of the week. We're just kind of violated that, but we'll come back in. Another, so two strong engulfing candles. This type of price action is quite bullish, but until we break above there, you can't really take into account any sort of buys, I don't think. Until we break back above this region, you'd then potentially have a nice little trade there. From here to here. 183 pips. With the amount of selling that's happened in this market, then without a doubt, this type of move here, you don't want to get too early into buys because you can easily get caught out by just a small bounce that then the trend continues. But if you start seeing the market structure change, then by all means, could be a possibility to get involved. You look here on the 4 hour, we had a really strong bounce in the last 4 hour candle. And if that momentum was to break through a level of support, then that's a couple of confluences that you can add into a trade idea and think to yourself that you can target a nice little trend reversal there. But when we look at key levels, if we break this level again later in the week, then it's probably going to open up even more selling to come. But watch out. I think, you certainly need to pay attention to sort of price action like this. How many times has it happened so far in the sell-off? Probably only had this one candle that was similar. And then what that proceeded to do was sell off. But what it did do, important to remember, that did make a nice little high for the week. So just watch, see what happens, and go from there, really, I think. Yet, though, if we do retest this on the hourly, and look, if we get an hourly closure as an engulfing bearish candle, well, then the trend's already in place, and it's probably clear to see we're retesting this level. Right, let's see. What have we got next on the list? Pound JPY. Okay. So it's interesting just to have a look between the pound. Breaking up that high, retesting it. You can see it much clearer here on the pound yen. Against the yen, the pound's gaining a bit of strength across the board, I think. This is also something interesting just to note as well. If you are looking into trading, it's a good lesson, just a little tip. For instance, a pound here, there is a potential buy in place, okay? But when you look at that chart, it's really, really bearish, and that's because the pound's up against a really strong currency in the dollar. But you could essentially be buying the pound against a weaker currency like the yen, and the chart is completely different. So you're still essentially doing the same thing. Fundamentally, you're buying the pound. When you put it against a different counterweight, a weaker counterweight, then that trade may well be a stronger trade. You can clearly see some of this levels of support that we've got in here. Take these highs and lows in the last kind of 3 or 4 months. Really large run up there. And we've broken through the 38 retracement. 61 is here, so that'd be a really strong level because you've got lots of confluences in there all together. So important to watch and wait to see how the price is moving on that element. So we'll wait and see. Yeah, I'd be wary about these buys because this is where you can just get quite easily tricked into some bullish price action that could really run you into some significant resistances. You don't want to be buying into resistance. You want to buy into support. You want to sell into resistances, of course. So I think that could well be a bit of a false move and a potential move lower back into 158. That 158 could well be a strong support level, though, that we could move from there. So I'm just going to make that clear for myself when I'm looking at this chart. So that's where it would be a really strong level of buys there. The other thing it may well be as well is that's an extension as well from that Fibonacci as well. So look, it looks like we retested that 38 a few times. An extension to come back into this region as well. So you've got lots and lots of potential confluences all coming into place there for buys if you wanted to get into the buys on the pound into this region here. Finally, let's have a look into the Aussie. Let's mark out some highs and lows here for each month. Just a low for the month here. Highs right up here. Yeah, so that's covered everything. When we look at the Aussie now, look, gives you a really good indication that we're retesting these lows for the Aussie against the December and February lows, and we're here again. So this is on today's price action. Just had a 4-hour engulfing candle as well, right on that level of support. So if you can add alongside that a few other levels of support, then that's a really strong trade. Really strong trade idea. If you can add more confluences alongside that, that may well be through your own analysis, it may well through indicators that you use. As I say, we use our own indicators that we've developed ourselves, an algorithm that gives us an indication of whether or not the market is likely to reverse. So we check against that, and if we've had an alert on there to say that this market is due to reverse now, then that would give you a really good trade idea. If it then also aligns with things like this as well. So when we look at the Aussie, you can see you've got good headroom above there as well. So, you know, if we were to take that sort of trade, you've at least got 150 pips to run into. Lots and lots of potential there. And it looks like it's at least a good level of support, gives you half a chance, doesn't it? In terms of where you could look at. Now, last time that the price has moved into here, this is the other thing that I like to look at. We've had one run up into the 0.72. The next one moved all the way up into 0.72 as well. So each one of these, so the first level of resistance that could come up against is around at least 150 pips away. But each move from this point so far has yielded at least kind of 270 to 300 pips on each one of those moves. If you're willing to really hold it for a number of weeks, then of course it's given you a huge amount of potential to move into. But just goes to show, you can make a single trade, you take profits at a few different levels. For instance, you could take that trade there. If it works out, you could take your first profit at this level, second profit at this level. And if you're really confident things are moving nicely, then you could really even hold all the way up to revisiting these highs as well, if you're willing to hold on for a number of months. Just depends what type of trader you are, but that type of analysis also works on the smaller time frames as well. So lots to go out there for the next week ahead, and we've analyzed both the crypto market, we've looked at the oil market, gold market, we've had a look into the forex market as well, and also outlined the most key economic events that are coming up soon. So hopefully that gives you an indication of some trade ideas for the week ahead. Let us know, get in contact, and let us know what your thoughts are on the market, what trades that you're looking to position yourself in, and be good to know. And of course, if you want to be updated each time that we go live, then join our free Telegram, the link below, just below this video there. Free to join, and you can just keep up to date with everything that we're doing on there. Every time that we go live, we notify you via the Telegram, and lots of other good stuff on there as well. But other than that, guys, thanks for joining in. Thanks for being a part of this session. So all the best.